Are you timing the cycle?
I think that you do have to hold X amount of cash, whether it's 1, 3, or 6 months in the bank. I think that that's just prudent risk management. I can't take the argument that Bitcoin is a zero seriously anymore. Bitcoin is a pristine collateral asset, right? It trades 24/7. It's transferable, and you can liquidate it on the weekends. You're selling high, you're buying low, and if you can kind of operationalize and systematize that into the DNA of your treasury operation, that's just free alpha. The future's so bright. You got to wear shades.
So I'm really, really excited about this panel with Stephan and Rory around how to manage it during volatile times. So please join me in welcoming these fine gentlemen.
Thank you, Rod. Okay, so let's get into it. So I guess maybe just give everyone a quick overview on yourself and what's your role for CleanSpark, and then we can get into it.
Yeah, awesome. I'm Rory Murray. I'm the Director of Digital Asset Management at CleanSpark, a Bitcoin miner and energy company. My background is in TradFi. I spent 8 years at a global macro fund called Discovery Capital. It was run by a guy, Rob Citron. Citron was kind of classic, macro and emerging markets background. So that's really kind of my training and how I think about the world. Left in 2019 for a number of different reasons, which I won't bore you with now, but basically saw the future of technology, money, and wanted to be a part of it. When you're a macro investor or at a macro shop, you're sitting really all the way at the top of the capital stack. You're waiting for a lot of other things to happen and for you to profit from it. I felt like I wanted to be a part of the future and kind of trust my own hands. So did that. Did a coding boot camp. Was building capital markets on an unnamed network, which I will not admit to, for a couple years. But my heart was always in Bitcoin. So when Harry Sudock knew that I was looking for kind of the next thing, he fished me out to come work with him, keep his coffee hot, and make sure he's dropped off at the train on time. We did that for 3 years and popped out the other side 2024. Were acquired by CleanSpark, and CleanSpark was kind of rapidly rescaling their Bitcoin hodl, rapidly growing. They'd gone from a couple exahash to now we're at 50 exahash and kind of continuing to grow. And we're looking at I was kind of a square peg in a round hole, TradFi background, kind of computer science stuff, or at least software kind of development, and then kind of Bitcoin mining and quite frankly a stiff upper lip from being in the space. So was a good place to kind of talk about how to handle an institutional hodl.
And I checked on a dashboard, so you correct me if I'm wrong, but I saw the number of coins that CleanSpark holds is 12,703, so it's a lot of coins. We're going to explore. So this was initially going to be a panel, but we're turning it into a fireside. And so we're going to be talking a little bit about what are the I guess Bitcoin treasuries, both for operating companies and then the treasury company side of it. So do you want to just start with any of your thoughts on what kind of allocation is correct to Bitcoin if you are an operating company?
Yeah, I think it's higher than zero, right? And that's where I like to start. We laugh, but to me, it's my framework for things. It starts with a binary. It's okay, and for me, what I would say is that we all gotten tired of kind of answering the same questions on Bitcoin. But after the Silicon Valley bank kind of blow up in 2023, I said, okay, I can't take the argument that Bitcoin is a zero seriously anymore. I'm not saying it's 100K, 200K, $1 million, 14K, but you go, okay, zero counterparty asset, trustless, permissionless, doesn't leak. You can transfer it across the border, carry it in your pocket. That's not zero anymore. And so for me, it's kind of, we're getting to that with the operating companies, and it's okay, it's a multi-trillion-dollar asset. It's got vol that's kind of at the midpoint and is actually coming in lower than kind of a Russell 2000 stock. It is accepted. It's accepted in multiple business. Obviously, the payment side is still kind of coming on, but it's higher than zero. So I think that we have left the building on. The big sea change to me is that it's no longer should we, shouldn't we. It's how and when. And if you're not in that conversation, you're just on the wrong side of history.
Gotcha. And so let's put it this way then. So you're a Bitcoin miner. You've obviously got expenses to pay. How do you think about what kind of allocation Bitcoin versus fiat while still having some level of operational flexibility? How do you assess that?
Yeah, I mean, I think what's nice about a Bitcoin miner is I think you're in the absolute perfect position to be a Bitcoin to be a Bitcoin treasury company. Not in the sense that I think it's used now, where Bitcoin treasury company means I'm going to simply exploit capital markets to acquire kind of more HODL, whether that's backed by a liability of a dollar of liability in the credit market, or whether it's backed by kind of an expensive kind of equity issuance. What it is that we produce the commodity, so it's our revenue asset, and you're right, you're exactly right. Our expense asset, our expenses are in USD. So how do we think about that? I mean, one is you don't trip, fall, and land in this space. Like, you have to have a view. Like, if we were just looking to make money, like, I'd still be on Wall Street, right? Like, you have to have a view that Bitcoin's the future. It's growing. It's on an adoption curve. It's going up and to the right over time. I think that you do have to hold X amount of cash, whether it's 1, 3, or 6 months in the bank. I think that's just prudent risk management, institutional risk management, and I think it also de-risks you. And there's multiple levers that you're trying to control for, right? You might, and this is what I think is hard to understand about an institutional Bitcoin treasury management strategy, is that we're trying to maximize the enterprise value of the organization across all of our different verticals, right? So there's one aspect of it, which is, how do I get the absolute top USD denominated value out of the 12,703 Bitcoin? And then there's also can I add ballast into the business to reduce the volatility? If I reduce that volatility, and can I show creditors, insurance, shareholders, etc., that we're prudent risk managers? If you're a prudent risk manager, you add ballast into the business, and maybe you're not maximizing every single USD dollar of every single Bitcoin, but you're driving down your cost of capital. And if you're able to drive down your cost of capital, you're able to reinvest in the business at a higher kind of return on invested capital compounding rate than your competitors. And particularly in the Bitcoin mining business, rewards that in a particular way because of the dynamics of the difficulty adjustment. So to me, that's a long, very political answer of not answering your question, but it's saying that the way that we think about it is, I think that we balance sort of prudent risk management, reasonable kind of best practices from we're publicly registered U.S. domiciled, publicly traded company, kind of best practices for that, while thinking about, while being ideologically and long Bitcoin.
Okay, so as I'm reading you there, it's obviously you have a large Bitcoin position. We're all bullish on Bitcoin here, but you have some fiat cushion, let's say, to help you deal with things that come up operationally. You have staff to pay, energy bills, etc. Now, our topic is around volatility. So let's talk about how you see that. Do you think about, do you have to be ready for a bear market that could come at any time? Or the other way, what if we have a lot of NGU and number goes up? How does that change your thinking?
Yeah, I mean, look, I like to joke that I'm the only person that I'm a barbell investor. I own Bitcoin and municipal bonds. Like, I'm very risk averse. And that's been, quite frankly, a little bit tough in this space, because I think, like I said, you don't just trip, fall, and land in this space. Everybody's kind of in this because they believe in it. So that is the kind of risk management, DNA that I'm trying to bring to this role, that I'm trying to kind of help us as an organization start to think about in a more formulated operational playbook versus kind of an overall kind of, we do it, but it's not necessarily operationalized into like a document necessarily. So what's nice about Bitcoin mining is you can decompose. Again, it's a very simple model. You can decompose your costs at the site level. You can decompose your costs at the portfolio level. You can also decompose it at the state level. You can decompose it at the site level. You can decompose it across a whole bunch of different things. And you can see exactly kind of where your costs are and what you need to do. So I think that there are levels where, and then there's also the capital stack and kind of how the capital stack of the organization evolves over time. So as you increase the leverage in a business, I think that we also need to be increasing our use of sophisticated financial risk management products in order to do that. And again, to me, that's okay. Cost of capital in this space is somewhere between 8 to 11%. Let's say that and that's for a Bitcoin collateralized loan. Let's say that I have a really good partnership with somebody. Let's say that I have $1 billion of Bitcoin at the custodian. Let's say that we have a line of credit backed by Bitcoin. Let's say that we have operational agreements that allow that we have segregated wallets, but we allow cash sweeps within that wallet environment, and we maintain over collateralization in there. And let's say that they acquire or have a broker dealer that trades derivatives. Now you have a full suite kind of financial product, and you're within this ecosystem that they have full visibility into. And so I would argue, I'd say, one, I always argue that Bitcoin is a pristine collateral asset, right? It trades 24/7, it's transferable, and you can liquidate it on the weekends. So to me, like, the fact that we live in this over collateralized, higher cost of capital world with Bitcoin when it's this pristine collateral asset is crazy. But we'll get into that, I think, next or later. The point is that when we think about how to do this, it's not just that we think about number go down. It's making sure that we are always able to kind of dynamically remodel kind of on a quarterly basis what our costs are. We can hedge that out, and we can do those, and we can use our scale, our relationships, kind of our legal compliance operation know-how to go to somebody and say, we haven't necessarily gotten all the way there, but this is kind of where I think we would like to get, and go, hey, why don't we do a Bitcoin-backed loan? Why don't I collar it? We say, hey, if Bitcoin goes up 25%, I've taken that capital, I've now invested it into growth, I've driven more Bitcoin, and I'm paying it off with a 25% appreciated currency. If Bitcoin goes down 20%, now I've collared that risk off, and you know exactly where you're getting your payback out. So then that to me argues, one, you have a pristine collateral asset, trading 20% liquid, you can liquidate it on weekends, and you have complete visibility into your payoff. And so that is something that I think we're not all the way there yet, but that's certainly how I think about one of the best in class ways to protect a Bitcoin balance sheet.
Now, your comments there speak to, you mentioned collars, and so when it comes to things like having hedging operations, are you also looking at that in terms of Bitcoin price? But there's also some financial products on the mining side, things like hash rate derivatives and things like that as
Absolutely.
a miner. So are you looking at those things as well, or are you more interested in the Bitcoin price side of things or the hash rate side, hash rate products?
I want it all, baby. I want it all, right? No, and this is, this is the opportunity, right? It's like there is so, and so I laugh, when I started my career, I was a Ben Graham, kind of looking for cigarette butts on the ground, kind of value investor. I was super interested in kind of arbitrage and kind of riskless profits. And I thought to myself, I was like, man, I really missed the world where you could go out, you could find mispriced securities, and you could arbitrage across markets. Like, the world Bitcoin is both the most, I keep going back to the talking point, but it's liquid, it's global, it's permissionless, it trades 24/7, and yet all of these capital pools are bifurcated. All of these operational pools are bifurcated. All of these processes are bifurcated. Like, look at the panel that we just went through. It's like they're talking about specifically Bitcoin going one way, and it's speed versus security, but it's kind of vertical. There's also this horizontal aspect, which is movements across counterparties. And then there's tying that all into like to me, it's our internal controls, it's our approvals. And so there's better pricing here on something, better pricing there. So what I think is that hash rate forwards are both good to buy and sell, because I think that to me, it's that is as clean as you can get of an exposure that we have. We're exposed to Bitcoin, but we're really exposed to kind of hash rate and difficulty. I think on price, you want to, when we design the philosophy, I'm sorry, I just ramble, but like when we designed this philosophy, we designed we kind of looked at how do we act in 4 different quadrants, right? Quadrant one is Bitcoin going up, hash price going up. Okay. Get a little bit of premium out of the market, but stay the hell out of the way, right? Quadrant 2 is hash price going up, Bitcoin going up, but maybe you look around, you think things are starting to get a little bit stretched.Maybe we've taken on some leverage earlier in the cycle, we've reinvested that in growth, and now we're kind of ready to go through a payback cycle. So you start to kind of lower your lower your strikes, kind of maybe be a little bit more aggressive on your spot sales, kind of over the course of the month, etc. Yeah, Quadrant 3 is a ranging market. And that to me is the best thing, because you're benefiting from you're selling high, you're buying low, and if you can kind of operationalize and systematize that into the DNA of your treasury operation, that's just free alpha. That's taking that concept of volatility as vitality and taking this idea that volatility is risk and completely flipping it into an asset. And then there's going down, which is where we talk about. So to me, it's all of these products satisfy things at different points in different places in those quadrants and different desires that we have as an organization. What I really like about it, and what I really like about being in the mining seat, is it makes my job really easy, because they've gone and built a world-class, major scaled operation, and we talk about taking advantage of that, which is that when we get to kind of feed the ducks a little bit, because when hash price is going up, Bitcoin's going up, FOMO's going up, we're long 12,703 Bitcoin. We're long the miners. We're long the energy. We're long the growth multiple on the business. And so we get to go against it. So I think a lot about hash rate futures. To me, quite frankly, I like being a supplier, because I think it's a Bitcoin denominated interest rate. And I like taking kind of Bitcoin, turning it, kind of going delta neutral, and then turning that into an interest rate. But also it's a great way to fund the business. These are all just tools in the tool belt.
Yeah, gotcha.
I'll shut the hell up. Yeah.
Well, no, I mean, one question. No, I mean, I think it's interesting. I hope everyone else is finding it interesting. I think it's interesting. So I guess another question that comes to my mind now, from what you were just saying, are you timing the cycle? Like, are you attempting to understand? Like, are we in a bull, or are we in a bear, or are we sideways? Like, are you trying to do that or no?
I mean, everything I would like to do is to systematize it so that we don't have to. Again, I think you have to have a view. If you're a risk taker, and like fundamentally, I think of myself as a risk manager, but a risk manager still has to take some version of risk. CleanSpark has to take some version of risk. Our mining operation, so we have to manage and transform risk. But I think the whole thing of what we're trying to do is I'm very complimentary about what CleanSpark built, and I want to take absolutely no credit for it. I was not a part of building the mining operation. I was not a part of scaling the energy. Like, I was not a part of that. But what they did, and they were very, very good about growing in a counter-cyclical way over about 2 cycles to do that. So when I showed up, what it was is they'd been very good about kind of selling their stack towards the high of the last cycle, and they'd started reacquiring it towards the bottom of this most recent cycle. And I said, hey, let's take that. It's really, you're temperamentally set up to do that. I can tell, because you've done this over several cycles. But let's try to systematize that into our DNA. And that's where the covered call selling and the put writing and sometimes the collaring and the hash rate derivatives, and then you get called away on the call. So now you're holding cash, but basis is increased. So now you can get a higher interest rate on your cash than you can at the bank. Like, that's where all of this suite of this kind of flywheel of financial services and products comes in. So no, I think that we're not trying to time the cycle. I think that we have a view, which is that we want to hold as much Bitcoin as we can. We want to use Bitcoin in order to get more Bitcoin onto our balance sheet, and we want to put in institutional grade risk management practices that systematize in a counter cyclical ballast into our DNA. And then you don't have to worry about timing.
Interesting. And so as I read and understand your comments there, you're talking mainly about Bitcoin price, but there's also, because you're a Bitcoin miner, there's also kind of the cycle of Bitcoin mining machines. And that can also play, there can also be this cycle where maybe during the heat of the Bitcoin bull run price, the mining rigs are also very highly priced. And then also at the bottom of the bear, the mining rigs are cheap. So can you speak to that also? Is that also another cycle or another game in itself to be played?
Yeah, when I was at Grid, I think that one of the things that was really great in Grid's DNA was thinking a lot about utilization rate, curtailment, second-gen machines, and being very thoughtful on the cycle. I think traditionally CleanSpark has been kind of very high uptime, has kind of been the game, high efficiency. I think that we're seeing an evolution in the market where the ASIC life cycle is becoming more important. Energy prices at different sites in different states under different tariffs during different seasons is becoming more important. And so I think what I would say is you can decompose this into three different specific buckets, right? You have the energy side of the business, you have the ASIC and kind of commodity mining side of the business, which I think is the ASIC cycle and a couple other things. And then you have the financial services side. I'm really focused in this particular role on the financial services side right now. I think that we have a great, Kevin Hennigan, who I think is going to be at Imagine If. Thank you, Rod, for kind of putting that on, is really looking at the energy side. And I think, Harry's got a lot of experience in the ASIC side, and I think that there's an opportunity to marry those all together. But there's just been a lot of work on standing up the desk so far, quite frankly.
Okay, so as an operational business, there may be times where maybe you want to expand, or maybe you have like a sudden fiat operational need. How do you think about the best way to get that fiat? Is it around, selling Bitcoin to get that fiat to do the operation, to expand? Or is it around borrowing against your Bitcoin stack? Or is it raising equity or debt just from fiat equity and debt? How do you think about that as a Bitcoin miner and Bitcoin Treasury holder?
Yeah, totally. You've named all of the different pieces. Each of them has a cost of capital. Each of them has a speed aspect to it. Each of them has a duration aspect to it. It's a non-stationary problem. It's absolutely it's a thing to solve. Things are a lot easier. When I was at Discovery, it's like you don't know how good you have it when you start somewhere early in your career. We had access to research and relationships and management time and all of those things. And I've been kind of wandering in the desert for 5 years, kind of in this more entrepreneurial role. And as I've popped back out at CleanSpark, I have much more of an appreciation for the fact that we really do have access to all of those things. So I think that we evaluate them. I think that we've come to the conclusion that we're trying to be as non-dilutive as possible at this link. I think there was a period where we said, hey, we have a vision for where we want to go. We want to grow to over 5% of the network, 50 exahash, and that means that an expensive equity capital is worth it because you're investing in really what's going to be the next 5 years of growth. I think we've sold more spot recently, but we've kind of balanced it with kind of Bitcoin lines of credit. We did a $650 million convertible. We try to marry the particular funding, the project that we're funding to the source of capital.
Like a maturity matching kind of concept.
Yeah. You're trying to match. Hey, like, it's probably worth it for me to pay 8% over 7 days if I have a short-term kind of USD need and I have this revolving line of credit with this great partner that I have. It might be worth it to me to pay 0% to finance my business, but have a larger scale liability over 3 years, but risk kind of more dilution up 100% if that's more of a general corporate need, right? And the other thing is that we have access with the Bitcoin and with the partnerships that we've built, we have access to kind of fast capital. So I would say each project is we look at kind of the return on the project, the duration of needing the capital, and the last thing, I think you mentioned it in your notes, but taxes are very, very important, and that's another place that I think we can really optimize. We have a great guy, David Ponton, who's ex-audit, I think at EY, and he's really helping us kind of optimize the tax sales. But there is for instance, we'll sometimes borrow Bitcoin, but use our Bitcoin to borrow USD. We've purchased Bitcoin in order to make a Bitcoin denominated buy using that Bitcoin in order to then optimize on the tax, right? We did this with the manufacturer purchase that we did in April. We said, hey, we're paying with Bitcoin in order to acquire these ASICs, but we would be an extra 10, 20% hit if we had to pay the tax. So instead, we said we'll pay the 8% interest rate. While during the period of time that we're purchasing those ASICs, we're getting them online, and then they're producing the Bitcoin to then be sold to kind of pay that back. And we're willing to kind of go into the market and make this purchase. So it's non-stationary, dynamic, and project specific.
Yeah, so it really is case by case. It's maturity matching. It's what's the cost of that capital, whether it's equity or debt or whatever it may be. Another topic I'm curious to get your insights on is the shift in worldview, right? In years gone by, people might have thought when they were investing into a company, they might have historically seen it more like, well, no, if I wanted Bitcoin exposure, I'd just buy Bitcoin myself. The reason I'm putting capital with you is I want you to just be a really good operational business. But is that worldview now shifting, especially in the Bitcoin Treasury kind of context now? People are saying, yeah, no, actually, I want my investment companies to try to grow their balance sheet, to grow the number of Bitcoins on their balance sheet. Are you seeing that shift in worldview, or how do you see that?
Yeah. Well, first, can I hit you with the Uno reverse? Like, I would really like to hear your thoughts on it, because I like, for everybody, I'm sure everybody in the audience is very familiar, but Stephan is a longtime Bitcoiner, libertarian, but very kind of, you know, contributor to the space, and I very much respect the way that you've both kind of contributed over time, maintained your principles, but also evolved with kind of the evolution of the space. So I'm really curious where you are on it right now, and kind of how your thinking has evolved.
Well, well, first of all, thank you. Yeah, I think more and more of us are starting to recognize Bitcoin is the hurdle rate, Bitcoin is our denominator, and so I think maybe we are entering a paradigm where investors are more comfortable, or they are desiring their companies to actually hold more Bitcoin, right? And I think here I'm thinking of like even the way like Michael Saylor will talk about how instead of dividending it out or kind of depleting capital down, it's more like now we're entering, you know, maybe we're now in this gold rush paradigm. Like we're trying to grow our balance sheets, whether that's us as personal individuals or us as businesses. We're trying to grow our balance sheet, and we see Bitcoin is the thing that we want to maximize. We want to hold more Bitcoin, like within reason, like you said. You want to have some fiat runway, let's say, to be able to manage your expenses. So that's, I guess that's how I'm seeing it. But I guess maybe what was motivating some of my question is maybe even in, if I'm thinking of like VC and angel world, where they are investing in Bitcoin companies, maybe there's been a slight shift in the paradigm there, because people might have historically not wanted, let's say you're an angel or you're a venture capital investor, you're investing in some of these companies, you might have seen it like, I just want you to be operationally really good at whatever your business is, and I don't necessarily need you to go and take Bitcoin price risk, because let's say if you, the investor, are already, if you want to hold Bitcoin, you're already holding Bitcoin, right? So I guess that's maybe we're seeing a shift in the thinking.
Yeah, I mean, I agree with that, like, pretty much largely, and you know, what I would say is you got to remember, Bitcoin ETFs launched 18 months ago, and you know the entire thought was like, okay, that's going to be really, really bad for strategy. It actually turned out that it was the best thing possible for strategy, and it was the best thing possible for this entire new industry. And so what I think what it did is, once again, it forced an innovation. And what it is what I love is it's the Bitcoin ethos, I think, can be thought of as at least partially embodied in this entire new space, which is what do you want? Let's decompose. What exposure do you want? If you just want straight Bitcoin exposure in your pocket, you can do KYC sats, you can sell a service, you can do that. You can hold it at Coinbase, you can make it easy, you can abstract it out. We have specialization of services now, like just like Becca was talking about. But and so you have all of that, but now what if you want, like, here's what retail can't do or a VC can't do if they just want price exposure, which is that we negotiated 5 different ISDAs across multiple counterparties with bespoke terms, because we're a multi-billion-dollar company. We have better pricing. We have better access to capital, lower cost of capital. We have a team to analyze things and data analysis and to enact on these types of things. So I think that what you're getting is you're getting the ability to decompose the types of exposures that you want, the types of risks that you want to take on, and you're able to allocate your capital across that stack to a number of different things. It's not, I think, I think what Sale's doing is brilliant. He's trying to kind of extrapolate a yield curve onto Bitcoin, but he's doing it really strictly within the capital markets. I think we're doing a fractal of that, where it's both kind of broader across kind of projects and kind of deeper within kind of what you can do on a funding a specific project that has a Bitcoin denominated rate of return. So to me, I just think that, like, I don't see them as competing at all. I think that they're absolutely complementary. I think that the market has spoken that there's desire for Bitcoin ETFs, there's desire for hodling spot, there's desire for futures, there's desire for capital markets plays, there's desire for operating companies, and we'll see what kind of comes next. So, the future's so bright, you got to wear shades.